and to clear any queries that you have. I know some of you have posted the queries in or mail, etc., in the link, and I will clarify those also. And if you have any specific queries with regard to what you have covered so far, feel free, ask me. I will try and address the questions or doubts that you have as far as the course is concerned. I hope you are enjoying the course. I hope I'm communicating as far as the course is concerned. In terms of your understanding, I hope you're able to follow what I talk about. In fact, when I start with this accounting course, what we do is we don't go around with the typical accounting way of sort of learning the course. For example, a typical BCom or a undergraduate in commerce student or 11th, 12th standard commerce student in commerce would learn accounting in a very, very different format. That is, they learn for preparing the financial statements out there. You would have heard about financial statements, your P&L or your balance sheet and so on and so forth. They they learn to prepare. So there is a particular method they learn to prepare a financial statement. Whereas our focus here is not to prepare a financial statement out there, because preparation will be done by preparing the financial statement is a job of an accountant who would do that, maybe or a chartered accountant who do that. But our job is to interpret, understand the financial statement. That is the key difference in the way I have structured this particular course. Key difference is understand the financial statement. If somebody gives you, because these are the two or three statements which are in the public domain of any company, listed company, your P&L, balance sheet, and cash flow statement. If any of these companies, if you get hold of any of those, you should be able to interpret it looking at these three statements out there. So that is the reason we focus on income statement and balance sheet to start with, and then we go to the cash flow statement, and then we move on from there. So that is the basic structure I have. Now, this is a basic structure, and that is the idea in which this particular course has been structured out there. Now I have my TA for this course, Mr. Devang. Devang has also joined here for the online meet. He is the TA, teaching assistant for the course. So most of your doubts when you post it, he will be the first person to look at it, then he will transfer it to me. So that is how we basically work. Now I just gave you again the purpose or the rationale for structuring the course this way. Now I leave it open to you guys. I will take the questions that are already posted in a few minutes, but I will leave it open to you guys to start asking me questions if you have doubts with regard to the course and so on. And as well as you can also give me a feedback as to whether you are able to learn, whether it is serving the purpose, or whether you are able to follow, or you want some changes and so on and so forth. Over to you guys now. I think you can raise your hand, and then I can call out, or you can just start. Yeah, one of you will have to take initiative. One of you will have to start. Any doubts on the course so far? What you have watched the videos? Yes, Mukesh.
Good evening, Doctor.
Good evening, sir. Good evening.
I am fortunate that I'm attending this course under you.
Thank you.
You have not left any room for doubts, actually, the way you teach.
Thank you, sir.
You make it sound so simple.
Thank you, sir. Thank you. Thank you for the feedback, sir. Thank you for the feedback. Please go ahead. Please go ahead, sir.
I've given feedback for all the 3 weeks.
Okay.
And I have posted a theoretical kind of question for you, which you will find, in this.
Sure. Yeah. The theoretical question, what you have posted, if I pick it up right, is on the purchase of equipment comes under cash flow from investments. Machinery worth 53,200 was purchased for Lone Pine Cafe. If cash flow from investments is nil because the purchase is adjusted in the bank balance. No. If you actually see the cash flow statement, we are preparing the cash flow statement from November 2nd to March 30th. Between November 2nd and March 30th, is there a cash outflow because of an investment? If I had purchased this equipment between November 2nd and March 30th, there is a cash outflow for investments. Yes, I would have taken it that. Because the machinery was purchased on the day prior, the November 1st, when the cafe was incorporated. So it doesn't come in the under the period 2nd November to 30th November, so 30th March. So I have not taken it as a cash outflow for investment. Supposing I had prepared a cash flow statement from 1st of November to 30th of March, then they should have come under cash outflow for investment out there. Am I with you, Mukesh? Mr. Mukesh?
Got it. Got it. Got it. Got it.
Thank you, sir.
Okay. And other thing is that, do you teach any other course under this portal?
As of now, this is the only course what I've done. I am slowly doing the recording for a course on corporate valuation. Okay, to give you my quick background about myself, I'm, as you know, I'm a accountant as well as a finance person because I have a basic degrees in my accounting, a cost accountant and your BCom regular and everything. Then I'm a PhD in finance from IISc, Indian Institute of Science, Bangalore. I've worked in various business schools, right from MDI and also in the industry for a very long time with Moody's credit rating industry. Then I was working in academics abroad in the Asian Institute of Technology outside India. And then I moved back and then rejoined IIT. So I dabble both with basic accounting as well as some courses in finance. I teach at IIT here. I teach basic financial accounting. I teach corporate valuation. I teach corporate governance because I'm on the board of a couple of companies. So I teach corporate governance. And elsewhere, I've taught investment management also. These are the kind of courses what I basically teach. Recording, I've done only for financial accounting or finance and accounting, introduction to finance and accounting. I'm trying to do another recording for corporate valuation. I think it's going to take some time, but it will be up. And I do one more course for BS data sciences on financial forensics. That is part of the course I teach. It's online. The other part is taught by a IT person because there is R programming and machine learning and everything. So I'm not an expert in that. So I take the help of a colleague of mine. So they sort of teach that. So I teach half basic finance. The other half, the forensic part, is taught by another colleague of mine.
Okay. I look forward to any of programs you do in future. Certainly look
Sure, sir.
forward to them.
Sure, sir. Sure, sir.
By background, I'm a mechanical engineer.
Okay.
So I have started, but I have an interest in finance.
Okay. That's
I
great.
have
That's
an
great, sir.
interest. So now I'm devoting some time to finance,
Okay.
and I also do a little bit of trading in shares.
Okay.
But as I understood that, first you have to understand the company, and to understand the company, you have to understand the basics of the company, the
Yes, yes,
finance part.
yes. The
So that's
fundamentals, what we say. This is the
fundamentals.
fundamentals. Yeah.
Fundamentals, yes. So yeah, and whenever I, used to help someone or teach someone, I always used to go by that. I always tackle a problem fundamentally. If I don't
Yes.
understand that, I can't understand it.
Yes. Very
So
true.
so,
Because
so
this is only introductory course. This course per se doesn't target an investment per se, but it gives you a basic idea about accounting and finance and so on. That is what.
yes, 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 yes. It has given me a lot of clarity.
Okay.
There are so many things, I'm now able to understand, and
Okay.
I'm certain that going forward, till the time I finish this course, I'll be learning a lot more.
Sure, sir.
And let me share that, you are among the top teachers that I have met in my
Thank you,
life.
sir.
There are only two or three, no, sir. It is my fortune and privilege to be associated.
Thank you, sir. Thank you, sir.
Thank you.
Thank you,
Thank you
sir.
so much. Thank you so much for the efforts you're making.
Thank you, sir. Sure.
And I look forward to it.
Sure, sir. Sure, sir.
Thank you, sir.
Sure, sir.
Thank you, sir.
Any other questions, please? Okay, let me take up the doubts. I think the questions that have been posted online. I think the first question that was posted was in these, that is again with regard to Loan Paying Cafe. In these transactions, we have paid back 2,100 of borrowed money to the bank. That is, in Loan Paying Cafe, if you recall, we had borrowed $21,000 from the bank and we have repaid 2,100 back to the bank out there. That is at the closing on 30th of March, by 30th of March. And you have deducted it direct from bank loan only. That was one side of the transaction. Now, please note, when I worked on the Loan Pine Cafe B, or Loan Pine Cafe second question, not B, Loan Pine Cafe second question, that is the preparing the closing balance sheet. I was not looking at any transaction. There was no transaction that was given out there. Please note, all that was given was what were the, what is the value of what they owned and what they owned. That is all that we had. We did not have any transaction. Only if you have a transaction, then of course there are two parts to it. That is, one is your either in your asset or liability or income or expenditure outside. What did they say? The statement said between 1st of November, during the course of operation of the cafe, $2,100 have been repaid to the bank. When was it repaid? When did the transaction take place? We don't know. This is a statement that means what? Now the balance that I have to pay is 21,000 minus 2,100. That's all. If you look at Loan Pine Cafe, that entire thing, we are not looking at transaction. We are looking at only the, what do you call it as, the value of what is it they owed or what is it they owned out there. For example, there was also a statement that said the cash in the cash register was $311. I hope I'm right with the numbers. There is no transaction there. That is, the cash box had $311 out there. So I am recording, the moment the cash box had $311, who owns it? Loan Pine Cafe owns it. So I record it as an asset. That's it. So that particular case was not transaction. Transaction, I have taken the list of transactions after that and try to see what is the effect of those transactions out there. There's a list of transactions of, I think you would have already started that list of transactions out there, or you would be starting. I think that will go on for about a week plus. So, where I have taken list of transaction for about 2 months and directly entered it into the P&L and balance sheet. Those are transactions. This is not a transaction. Because it is not a transaction, I have deducted it from the bank and given you what is the amount that you owe as of 30th of March. That's it. Now I go to the next question out there. Yeah, purchase equipment is fine. The next question is a little more out of the subject. What is the A in accounting or scope of corporate for MBA finance students, and what is that about what will they ask in the interview and so on and so forth. Typically, exactly, it is not within the syllabus, but of course, you have asked me, I will have to clarify. I will clarify. What are the kind of questions they'll ask me in the interview? If you have done a very basic course in finance and accounting, they will be asking only what you call it conceptual questions in accounting. For example, I'll give you an example, which I ask in the interview. Profit is good or bad? Everybody says profit is good. Fine. When profit is good, when earnings is good, then why do you enter it on the liability side of the balance sheet, not on the asset side of the balance sheet? So suddenly people get a little confused out there. Liability is not good, and whereas profit is good. So what? Very simple concept. Concept is, I am adding the profit to the capital because the profit belongs to the capital provider. So I owe the profit back to the capital providers. That's it. So that is how it basically works. I mean, in the interview, when you sort of do a little bit of finance, I do introduce a little bit of finance also as part of this course. You would sort of look at what is the cost of capital, cost of equity, cost of debt, and what is risk and return, relationship between risk and return, what is time value of money. Those are the kind of questions what you would get if you have done only a basic course and you are appearing for an interview. This is a very basic course. If questions have to come based on this particular course, right? That is the basic thing, conceptual. Now, what are the kind of career options I have in the corporate after an MBA in finance? Huge. What is the kind of job you want to get into? You want to get into a treasury function in a corporate? Yes, that's a big job. I mean, huge opportunities. Treasury function is idle money. Simple. What is treasury function? Idle money never grows. So corporates or any entity will keep getting money at some stage. Will have to pay for their vendors or whatever it is. So this cash inflow and cash outflow will never match. Will never match in terms of time out there. That is, today I'm getting 100 lakh rupees, whereas I don't have the use for 100 lakh rupees today. I have the use for it only 10 days down the line. For 10 days, if we keep the 100 lakh rupees with you idle, the money never grows. It is idle, it is stupidity. So what you have to do? What is the treasury function's job? The treasury function is take this 100 lakh rupees or whatever, park it somewhere for 10 days so that it is earning something. On 10th day, when I have to pay about 60 lakh rupees, I should be able to get that 60 lakh rupees. And during that period of 10 days, these 100 lakh rupees should have earned something. That is, treasury function is managing cash in such a way or money in such a way that you will have the funds as and when you require, and you will park the funds when you have excess funds. This job also corporates do it. I mean, typical, all corporates will do this job also. This is I would say, a most exciting job, especially the current market conditions and so on and so forth out there. I think Devang is laughing the moment I said current market conditions. And it's a very exciting job. If one wants to sort of play around with that also. And you will get into regular investment banking job, you will get into equity research job, and so on and so forth. That market is also wide open out there. So careers in finance, because ultimately, if you look at it, you have a fantastic product. You have brought in a fantastic product. Bottom line, you have to convince the finance, the CFO, that is, this product, he is going to create value to the enterprise, value measured in monetary terms. It's going to give you a return. So anything you do, unless measured in monetary terms, is not going to work. Even if I hire somebody by paying 2 crores per annum. Perfectly fine. Then if I hire somebody from 2 crores per annum, a HR does it. Now I would say you hire him for 2 crores, but what is the benefit he's going to get to the company? Is he going to get 200 crores to the company? Then only it's worth it for me to pay 2 crores to him. Otherwise, it's not. So bottom line, everything translates to money. Right? These are, I think, now I've answered the almost all the questions that were there in the link that I got from that. Now it's again back to you guys and it's open. You can ask me, feel free, don't hesitate. Please note, this is a basic fundamental course. So every question is valid. Don't be shy to ask. So if I ask this question, will I look stupid? Will I look like ignorant? Actually, no, because since it is a very basic course or a fundamental course out there, every question is appreciated and valid out there, right? I'm parallelly teaching the same course now to the MBA students in classroom also, right here at IIT. So I know what are the kind of questions that I can expect. Open to you guys.
So we'll have such sessions in future.
Yeah. Every 2-3 weeks, I will have a live session, sir. Every 2 weeks, every 3 weeks. Every 3 weeks, we'll have a live session. Totally 4 live sessions. At the end of 3 weeks, we are having. At the end of 6, at the end of 9, And at the end of 11 weeks, not 12 weeks, your course is over. At the end of 11 weeks, I will have 4 live sessions totally will have. If there is more demand, I can have more also. I can have every alternate week also I can have, not a problem. There's
Super.
one question in the chat box. What is financial accounting process in a business? Financial accounting process, Mr. Ajay, financial accounting process in a business is the process of recording a transaction. How do they record a transaction? They have process of journal entry, ledger, whatever it is. That is this entire process where you record it. That is, for example, I record it as in this particular case, I withdraw money from the bank. I record in my books, that is bank account goes down, my cash increases. The method of recording, the process of recording two parts of the transaction is nothing but financial accounting process. And finally ending up with the P&L and balance sheet out. Am I with you now? Yeah. Mrinal Saxena, Mr. Mrinal Saxena, kindly explain which and how loans and receivables would be classified as short-term assets or current liabilities. Short-term assets is current 180 days, 18 months, especially prepaid insurance. Normally, theoretically, any amount which is due within the financial year, the current financial year, is all treated as current assets out there. Is all treated as current liabilities out there. Or any asset which will be converted to cash. That, for example, as you have rightly put, receivables, which is converted within a period, within the financial year, current financial year, is all what we call it as short-term receivables or short-term asset out there. Even when I say loan, for example, I'm going to take a small example here. Imagine I take a loan of about 10 lakhs from the bank. And that entire 10 lakhs of loan has a tenure of 10 years. Perfectly fine. The day I take 10 lakhs loan, the entire 10 lakhs is a long-term liability because 10 years. Next year, and the loan has a clause, for example, I pay 1 lakh every year. I repay 1 lakh every year of the principal for the next 10 years so that the loan gets closed. Second year, first day of the second financial year, what happens? Out of 10 lakhs, 9 lakhs is long-term liability, long-term loan, because you'll have to repay after the current financial year. Whereas 1 lakh you have to pay in the current financial year, which is a short-term liability. So it becomes what is called as a current liability out there is 1 lakh. That is, what do you call it, as the repayable part of the long-term loan in the current financial year is 1 lakh, which is a current liability. Whereas the 9 lakhs will remain as a long-term liability in your liability side of your balance sheet out there. So, to differ for the assets and liabilities, normally the current financial year is taken. That is all. The current financial year is what is taken, and based on that, they will decide it is a current or short-term or long-term. Loan, working capital loan, always a short-term loan, because the tenure of the working capital loan is only the financial year, not beyond the financial year out. The 12 months, what we call. So working capital loan will always be short-term loan. Long-term loan, whereas due more than a year, is always long-term. Only the part of it, if it is due in the current year, like I took that example of 10 lakhs, that alone will be the short-term liability. I hope I have addressed your question, Mr. Manal Saxena. Even the prepaid insurance per se, I can prepay the insurance. Prepaid insurance will always be current asset for me. Because you are not going to prepay for 5 years. You are going to prepay at the most for next 12 months out there. So prepaid insurance will always be a current asset out there. Am I with you now?
So if I take a loan in
Yeah.
a February
No.
and I have to repay it in June,
Uh,
it crosses the financial year.
it crosses the financial year. That is what, when I say financial year, normally we say 12 months. In this particular case, you take it in April, February. You have to repay in June. The tenure of the loan is only 3 months.
Hmm.
Tenure is not 12 months. If the tenure
Hmm.
extends beyond 12 months, that is where we talk about a financial. If the tenure itself is 3 months, less than 12 months, then we take it as a short-term loan.
Fine.
I think Devang is also posting all the answers, whatever I am replying. That's good. Okay. Yes, Mr. Ajay. What is credit memo and debit memo in finance out there? Normally, credit note, debit note, etc. For example, in the transactions, what I have given, I'm not sure whether they have come to that stage where I have taken the list of transactions of GS. Not yet. Maybe you will see it now. What happens is, imagine in that transaction, I have purchased raw material from a vendor out there. I have paid for it. The raw material has come into my factory, and actually I've seen that part of it is defective. So I send the raw material back to them. When I send the raw material back to them, they will have to pay me the money. They may not pay me the money. They will send me what is called as a credit note to me. That credit note means that they owe, that is my money of whatever amount I return, whatever amount of worth of goods I return, it is with them. That credit note, I can use it when I make a purchase the next time. Next time I make a purchase, instead of paying the entire money as cash, I'll pay part of the money as cash, and whatever is the credit note, that is the money with them, I can give it. Similar is the debit note out there. That is, their money is with you, you're not returning the money, you are giving what is called as a debit note in that particular case. Am I with you now? Credit note and credit memo, same, more or less the same, sir. Credit note and credit memo are less the same out here in this case. Minor legal differences are there. Like I had said in the earlier class also, I had said that I am using akin to debtors, accounts receivable, notes receivable, bills receivable. I am clubbing everything and using it as the same. But legally, if you look at, and from an accountant point of view, all these four are very different, used in multiple different contexts out. But for our understanding, we are keeping this entire bunch as receivable as an asset for base. That is what we are looking at. So there are differences. I'm not saying there are not differences, but for our understanding at this stage, I think we can club it and then take it because as a basic course.
जास्त नाही आहे पण असं 50च्या आसपास होतं.
Mr. Rishikesh, I think you have to go on mute. Yeah. Next question, please. You can ask me. You can even unmute and ask. No problem. I think Devang has put in a little more, with a little more clarity, whatever is that debit note and credit memo and everything. With Devang is a chartered accountant, so working with me for his PhD. Yes, please. Next, we have another half an hour. It's 6:30 now. We have time till 7. I mean, if there are no questions, then I'll close early. That's all. Otherwise, if there are questions, you can ask them with regard to the course. I mean, Mr. Mukesh gave a feedback. If some of you have some other concerns, right, difficulty in learning, etc., please feel free and tell me. How have you felt about this course, etc.? Or you want some changes to be made, whatever. Yes, Mr.
Evening, sir.
Vedant. Yeah.
Sir, sir, I'm from Pune. Actually, I'm doing an undergraduate in computer science. I had an
Okay.
interest in finance, so I'm pursuing your course, and it is going so fabulous. I'm understanding every and each point of view, trying to grasp
Yep.
a new point of finance and trying to understand it. It is going smoothly, sir, and you are teaching fabulous, sir. You are really amazing. I really
Thank
want
you,
to
sir.
thank you.
Thank you, sir. Thank you very much. Thank you. It's a
Is
very
it-
basic course. You're most free to get in touch with me if you have a question. Yeah. I think Mr. Azad has posted a question. Please explain, sir, depreciation for every product less than 10% as straight line method also. Depreciation means reduction in the value of the asset due to usage or passage of time. That's all. Now, for every asset less than 10%, no depreciation. The percentage of depreciation can vary with the kind of asset. There are stipulated guidelines that are given out there for tax purposes. What is the kind of depreciation that we can calculate? For example, if you have a car, automobile, normally the rate of depreciation is about 33% every year or 20%. It can range anywhere between 20 to 33% every year out there. So you can depreciate the car in about 3 years or 3 years, or you can depreciate it in 5 years. That is the given flexibility given to you. If you have a computer, they say first year you can depreciate up to 80%. The second year you can depreciate the next 20%, and after that it is scrapped. That's all, it is zero out there. So the rates are basically number one for the organization. Number two, most of it, they are some stipulated guidelines for that out there. Now, coming to the straight line method, there are two methods of depreciation that is allowed as per your tax laws. First is what we call it as the straight line method. Straight line method is very simple. I purchase an asset for 10 lakhs. The asset has a scrap value of 1 lakh at the end of the 10-year period of its life, because I estimate the life, it's an estimate. I estimate the life of the asset for 10 years, and at the end of 10 years, I estimate that I will be able to get 1 lakh out there as scrap value. That means 9 lakh worth of machine, I am going to utilize it over a period of 10 years out. What is straight line? 9 lakh is what I'm going to utilize it for 10 years, divided by 10. So 90,000 rupees is the amount of depreciation that I'm going to charge every year on that particular asset for the next 10 years. Straight line method, simple. Now the other question that would come to your mind, Mr. Azad, would be, what happens in the 10th year? You get less than 1 lakh when you sell the machine. Possible. In the 10th year, when you sell the machine, you get only 80,000. You don't get 1 lakh. In the 10th year, when I sell the machine and I get 80,000, that means I have got 20,000 rupees less than what I had anticipated. In the 10th year, in the P&L statement of the 10th year, I will say loss on sale of machine 20,000, because I expected it to sell at 1 lakh. I am selling at 80,000. In the 10th year, I will write loss on sale of machine 20,000 out there. So that part of it is there. Sir, I sell it more than 1 lakh. I sell it for 1,30,000. In the 10th year, same thing. On the revenue side, profit on sale of machine 30,000. Simple. That is all that will happen out here. 10th year only. Now, the other method of depreciation is what we call it as reducing balance method or return down value method. Now, let me take the same example. I said that in this case, in the return down value method, it says that I purchase a machinery and I want to depreciate the machinery at the rate of 10% every year. So first year, 10 lakhs is the value of the machine. At the end of first year, I depreciate it by 10%. My depreciation is 1 lakh out there. Value of the machine at the beginning of the second year is only 9 lakhs. Second year, I depreciate again by 10%. What is the value at the beginning of second year? 9 lakhs. So I depreciate it by 10%. So my depreciation value is 10% of 9 lakhs, 90,000. What is the value of the machine at the end of the second year or at the beginning of the third year? 9 lakh minus 90,000, 8 lakh 10,000. At the end of third year, I depreciate 10% of that 8 lakh 10,000. I depreciate 81,000 rupees with the value I depreciate. End of third year, what is the value of the machine? 8 lakh 10,000 minus 81,000. So that is how it goes, and that is what we call it as a reducing balance method or return down value method. Theoretically, in a reducing balance method, your asset will never see a life of zero out there. It will only be closer to zero. So you say 10 years is the life of the machine. At the 10th year, whatever is the book value of the machine, you sell it. And then if you get that money, well, fine. If you get more than that, profit on the sale. Supposing on the 10th year, after all the 10% depreciation, the value of the machine is 1,20,000. And you sell it in the 10th year for 140. You have got 20,000 more than what is the book value, profit on sale of machine. You are selling it at a price less than the book value, loss on sale of machine in the 10th year. I hope I've answered your question, Mr. Azad. Okay, now I have a question from Mr. Rishikesh. Kindly explain cash flow statement. Cash flow statement, I think you can, number one is you can, because what aspect of cash flow statement, it is not mentioned, it is just cash flow statement out there. I would suggest you watch the cash flow statement video again, but I'll give you some basics out here. The basics what I'm going to give is cash flow statement traces the inflow and outflow of cash, the cash coming in and the cash going out, actual money coming in and actual money going out. That is all the cash flow statement traces. And for a specified period of time, say March to the April 1st to March 31st, I will trace all the cash that comes in. Cash means cash coming in hard cash, money getting credited to the bank, both are taken as cash. So we have cash coming in and the cash going out during this particular period. We don't worry about for what purpose. For example, I would have bought some product 3 years back. When I bought the product 3 years back, I would have recorded it right then, but cash I am paying today. So I will record the cash outflow for the product which I brought 3 years back, because cash is going out only today. Actual cash coming in, actual cash going out. That is what a cash flow statement does. Now, further, the cash flow statement also classifies the cash outflows and inflows into 3 broad categories. That is, cash outflows and inflows because of operations, cash inflows and outflows because of investments, cash outflows and inflows because of financing activity. Why? I need to know how much cash is coming in and going out from my core activity. How much cash is going out because I am financed my venture, because when I pay interest, it's cash outflow for financing. How much cash outflow or inflow is happening because I am sort of making some investments in the business. That is where we basically classify the cash flows out there. So now I hope I've given the very basic understanding of the cash flow statement out there. Thank you, Mr. Azad. I read your comment. Thank you. Any other question? Please go ahead. I think Devang has already posted cash flow statement also out there. Thank you, sir. Thank you. Thank you, Mr. Rishikesh. I know you're all in various parts of India. I am a faculty at IIT Madras, Chennai out here. So most welcome. If you happen to come this side, Chennai, you can most welcome to come and meet me. And if you want to, you can also drop by my office out there. What is accounting principles? Fine. Basically, we call it as accounting concepts. For example, entity concept I would have talked about. That is, every business organization, we treat it as a non-living entity. Entity concept. Conservatism concept. When we talk about purchases, what is the principle that we follow? Record it at the cost at which you have purchased or the market value, whichever is lower, what we say out there. Now, this is another accounting principle. These are all what we call it as accounting principles out there. Entity concept, conservatism concept, accrual concept. We say we prepared accounting in accrual concept, as you would know. That is, I make a sale, I have not received cash, ownership has transferred. So what do? I record it as a sale. That is, sale as accrued. So accrual concept. Now, accrual concept, conservatism concept, entity concept, these are all what we call it as the accounting principles out there. I hope I have addressed your question. Are there few more? Yes, there are few more also. You can pick up any basic textbook. I think they will also cover, or I also cover as part of the course as we go along. For example, these are the three. That's what I said. I hope I
I
have
have two
addressed your question,
questions.
Mr. Jay. Yeah.
Yes, sir, I have two questions.
Yeah, sure.
A couple of your questions mentioned gap principles, G.
GAAP.
Yeah. So what are these? And one of your questions in the quiz uh, mention an answer as contra asset.
Okay. Contra asset. Okay.
Contra asset.
Okay.
If you could
Contra
throw some light.
entry, I would have said contra asset. Con What be? You said? Yeah. Now, what we in this particular case, let's sort of go ahead. If I have to sort of look at what we talk about contra asset, contra entry, and things like that, we will say that when there are transactions that are impacting both in the sense of what you call it as your assets itself. For example, I draw money from the bank. Your assets are getting impacted in that case twice. What we call it as contra. More explanation will come to that. Now, what is US GAAP? These are all what we call it as accounting standards. There are accounting standards. GAAP is generally accepted accounting principles are followed basically by the US out there. The US government follows what is called a GAAP principles, generally accepted accounting principles out there. And those accounting principles are very, very strict and what do you call it as it is not only very strict in the sense that it is a very transparent, number one. It is also what we call it as disclosures are very high. That is the word I was looking at. The disclosures are very high. For example, if you look at your international accounting standards out there, which is followed by many countries. In India, we follow what is called as Indian accounting standards out there. Now, what is the idea? Because every country has a different accounting standard, there is a move to sort of synchronize everything, and they call it what they call it as IFRS out there. There is what is called as an IFRS which is coming in, and there are a lot of link that they are trying to sort of integrate out there. When we now coming back to the contra asset, it is the account that affects related asset account in the balance sheet out there. That is what I said. That is typically what we call it as a credit balance rather than a debit balance. Or I have not taught credit and debit, so I will not use those words out there. So it basically it sort of offsets out there. For example, I draw money from the bank, cash. Now cash is coming into me. So what is happening? An asset which is there is reducing. Another asset is basically increasing. That is, the asset itself is getting impacted twice out there. So one asset is going down, the other asset is increasing out there. Bank account going down, cash account increasing out there. That is what we call it as a contra principle. Contra. I hope I have answered.
So most of the entries actually have a double entry.
Double entry is
And
different, sir.
transit.
All
Okay.
entries will have double entry. Contra is the same head, the accounting head getting impacted twice in the case. That is what we talk about contra.
One by way of debit, one by way of credit.
No, one way of credit. Let's not even do it. I withdraw money from the bank. When I withdraw money, asset is impacted, bank balance goes down. When I have cash with me, asset is again getting impacted because cash is increasing with me. So that is what we call as contra. That is the same head getting impacted more than once or twice is what we call it as contra out there.
Fine.
Yeah. What exactly is the carrying value? The value that you are recording in the financial statement out there. The value that is recorded, that is return in the financial statement that you carry forward. For example, I say raw material. When I say raw material, I have purchased raw material from Himachal Pradesh for 50,000 rupees a ton. And I incur another 20,000 rupees on transportation of that raw material to my shop, to my godown or whatever it is, to my warehouse. So what is the total value of the raw material that I will record? The total value of the raw material that I will record is 70,000 because that is the landed cost for me. Now, what is the carrying cost of that raw material in my books? The carrying cost of the raw material in books is not 50,000. 50,000 is the purchase price. The landed cost for me is 70,000. So I will carry it in my books at 70,000. That is what we talk about carrying value out there. Carrying value is the value that is recorded in your financial statement. I hope I addressed your question, Mr. Manal.
So is the depreciated value also carrying value?
Depreciated, yes, depreciated. Today, this year, my value of the machinery is X. That is, X is whatever the value I purchased minus the depreciation. That is the carrying value of that asset in my books as of today. Yes.
Thank you, sir.
Clearing GL account for, I'm not getting, Mr. Ajay. Can you sort of elaborate a little bit? Why we use clearing GL account in business? General ledger, that is what you mean? Do you mean general ledger? Okay. We use clearing general ledger because what happens is when a transaction happens, you record it out there. You record it in ledger journal, then you record it in ledgers and so on and so forth. So that is the process of what you call it is entering a transaction, ultimately leading to a balance sheet, and P&L out there. So we use what we call it as in a general ledger. Whenever at every periodic interval, when you sort of consolidate and close, you use what you call it as a general ledger to record, group these transactions. For example, I make purchases. In the example I would have taken, I would have made about 3 or 4 purchases I would have. Whereas in typically organizations, there are purchases which can keep happening continuously out. When purchases keep happening continuously out there, so what happens? You have to group all these purchases, accumulate all that so that you can carry it to your balance sheet on the asset side as raw material purchases, various kinds of raw material. So all these things, as and when the transaction takes place, you record in a ledger out there. That is what happens is declaring a general ledger account, you record, and then you basically take it to your P&L and balance sheet out there. I think carrying amount, he has already put in, Devang has already put in. I think put in for your clearing general ledger also. Any other question, please?
The concept of depreciation
Yeah. Yes,
also
sir.
comes in when we are renewing vehicle insurance.
Of course, yes. Because the
And
value
there
of
is
the vehicle reduces. No? Yeah.
the value reduces. There's a term called IDV or insurance declared value, I presume.
Insurance declared value, yeah.
But as long
Insurance declared value will change with every insurer also. Some insurers,
yes, and they give a scale also. You can
yes.
move it
Yeah.
up or down.
Yeah.
But in the concept of depreciation, say a vehicle should have zero value at the end of 10 years.
Okay. Scrap value. It will have a scrap
Correct.
value. Some values, the
But
metal values will
as
be there.
far
No?
as the insurers are concerned, they keep on offering you a value, though it is less, but they keep on offering you some value or the other.
Because insurance can be offered only to a vehicle which is active. If the vehicle is inactive, the vehicle is immovable, the vehicle is sorry, it does not work, then insurance cannot be offered for that vehicle. So if a vehicle is mobile and active, then there has to be some value for that, some minimum pittance value for that. I have a 20-year-old car, and there is today the insured value for the car is very, very minimal. It is less than, it's about 20 or 30,000 rupees. That's all. That because the car is still usable. The day it becomes unusable, then there will be no value. Till the day it is usable, there is a minimum value to it.
Okay, so that is the value they consider if
That
there is
is
a
the value
write-off.
they will consider as you go along. As you 10 years, normally beyond 15 years, that is what you call it as a usable value. Beyond that, they may not even take depreciation. After, if you take a 20-year-old car, they will say only 20 or 30,000 rupees as the value of the car and do the insurance. That's all.
And if there's a total write-off also, that is the value they will consider.
That is the total write-off, that is the value. I mean, that is what you will have to realize, hopefully, when you sort of write off the vehicle.
Right, sir.
Okay? Yeah. Sajay, again, what is reconciliation in financial accounting? See, reconciliation happens because of our example. One of the examples I'll take about reconciliation is they normally talk about bank reconciliation. Right? So, bank reconciliation, let me take this example. Moment you receive a check, I mean, today we are all doing NEFT and RTGS and everything, but a couple of years back at least, when you receive a check, then what happens? You record as the amount received. Whereas the bank, you deposit the check and it will take whatever 24 hours or 48 hours for the amount to be credited. You issue a check, moment you issue a check, the amount is reduced from your bank balance in your books out there. You have a book, you maintain it. But in reality, the money will get out of your account only when the party to whom you issued a check presents it to the bank and the bank honors it and then collects the money from your bank account and so on. It can take 2 days, 3 days, 4 days, whatever it is. In the meanwhile, your account balance and the bank balance, actual balance in the bank, will never match. Because you issued a check, you have deducted that amount. Whereas the check is not cashed, bank balance will be high. So when you sort of reconcile these things, that is what we call it as reconciliation. Reconciliation between what is called as bank balance and your books out there. There can be purchase reconciliation also. Purchasers account can keep on purchasing, they can keep on issuing the stock register. They will say the stock register comes in, they issue. Every time they issue it for production, the accountant will not even know. Right? Because you will know only when it is purchased. You will not even know when it is issued to production. Only when it is sold, you will have know. So what happens in this particular case? At every stage, you will sort of reconcile the account because my financial accounting books will say you have purchased 10,000 items. Whereas when I go and check in stock, physical verification of stock, I find only 3,000 items. And I know 10,000 items is raw material purchased, and I know 2,000 items is in finished goods out there. But when I go and check, there will be 2,000 items, or there will be 3,000 or 4,000 items in the finished goods out there. So what you do, you reconcile all that. That is how much is issued, how much is coming back to your finished goods, etc. That is all what we call as reconciliation in the financial accounting. Have I clarified, sir? Thank you. We have another 6 minutes more. Please go ahead. No problem. I can take more questions, 1 or 2 more. Or even if there are more, I can continue. Not a problem. Yeah, bank reconciliation. That also, yes, typed it. I think Devang is very fast in all this explanations, I think. Any questions you have, further part of the course, please feel free to get in touch with me or post your queries. We will address it. Now, at the end of third week, we are having a live session. At the end of 6 weeks, we will have one more live session. Again, normally it will be on a working day like this. I think mostly Tuesday. We will have it mostly on a Tuesday at same 6 p.m. out there. That is what our time will be, 6 p.m. on a Tuesday out there. So next 3 weeks from today, we will again have it. We will announce it, I think, as we call.
So interim, if we want to post any questions, how do we do?
I think there is a method where there is a link provided where you can actually post questions out there. And we keep looking at it every week we keep looking at it and we will address it. There is a link that is provided and we can post your questions, because that's how I got your question also. And then I can send a response also. There is a link. I think you can access that link out there.
This link was specially given for this Zoom meeting, but I think there's on the course module itself.
Course-wide module, there is an ongoing thing where you can post, and I can reply to that on an email with the answers to the query.
Right.
Am I right, Ravi? You're there, Ravi? I think that is how it was done last time also. I'm offering this the third time I'm offering this course in the last 1.5 years. Sure, Mr. Ajay, you can ask me more questions. I will try and answer. It's all, because I'll try my best to do it. Or, of course, my TA Divang is there. So we will certainly address all the questions possible. 6th week, we will have one more live session. Please tell any of your friends who are also doing this course so that they can participate in the live session and get benefited. If there are no more questions, then I will understand the topic better now. We'll work on it. Sure, Mr. Manal Saxena. Perfectly fine. I think there are no questions. I think I will slowly close the live session. Any questions? I can still take it. I got a minute or two more. If you have more questions, I can extend it. That's not a problem. But next session will be at the end of 6 weeks, because you have finished 3 weeks so far. So we will have it at the end of next 6 weeks. At the end of 6 weeks, same thing like a Tuesday at 6 p.m. we will have it.
So on the review of assignments, we can find out which one is right or which one is wrong.
Yeah. If you have queries on the assignments also, you can post, sir. I will certainly take those queries also.
So
explanations you may require, etc.
Is there any option where where the answers are explained, because it's basically it comes at right or wrong, comes like this.
Okay. Well, there is no, I think, material that is posted where explaining each answer per se. If you have any specific query about any of these questions, you can always post it. We will address it.
Fine. That is more than enough. Right.
Okay. Yeah. Okay. Thank you very much. Thanks for participating. We'll meet at the end of 6 weeks out there. Thank you very much.
Thank you, sir.
It was nice
Thank you,
interacting
sir.
with all of you. Thank you. Feel
Same
free.
here. Thank
Ask
you,
me
sir.
more questions. No problem. Thank you.
Definitely.
Thank you.
Thank you, sir.
Thank you.